All right, getting ready. Let a few more people see those notifications, that little red dot, and the notifications on people's smartphones. We'll be getting ready. Thank you all for joining me. Here we go. In three, two, one. Hey, and we're back. We're live. Hello there. I'm Mitch Goldberg. You're watching my live stream. This is about personal finance, investing, Wall Street, financials, financial chicanery, all kinds of stuff. Borrowing, spending, budgeting, you name it. We talk about it here. That's why it's called Be the Boss of Your Money, so that you're the boss of your money, not your money becoming the boss of you. We're going to talk about some charts, quick review of the market. This is the weekly. Thank God it's Thursday edition. So we're going to roll a quick intro and then we're going to get into it. It's going to be a good one. So stick around. If you have any questions, please ask me in the comments. Words of appreciation, words of advice, anything. I love hearing from you. It's the best part of the show. If you're watching this in the replay, same goes for you. Hit me up with any questions. And here we go. All right, we're back. Thank you so much. We're just getting started. Hello, Asher. I see you, buddy. Good to see ya. Yeah, we're talking about the markets. We're talking about personal finance today. I want to get into some charts. And, you know, there's two charts I want to look at. I want to look at the parabolic ones and I want to look at the flat ones and give you a little insight into one of the ways that I evaluate stocks, whether I want to buy them, sell them, etc. So this is just some strategy that I use. You are welcome to adopt my strategies as your own. I know the screen is blinking a little bit. There's really nothing I can do about that. I've tried everything. I just switched browsers. I redid all the cables, etc. It's okay. You won't notice. We get used to it. So we're going to talk about that. We're going to do a quick update. This was a special week because it's the week of infrastructure. And I know next month is when the House of Representatives will finally uh, vote and pass that, ratify and all those things with the infrastructure bill. But we know it's here, bipartisan agreement, 69 yay, 30 nay, and there was one that just didn't seem to be counted, okay? Because, 100 members of the Senate. So I'm doing this a lot. I'll stop that. So, I hope you guys have a good time watching the show. I do want to get you into some things, and I really want you to, get the full enchilada here. I want you to learn. I've been doing this for 30 years, 30 years, 31 years actually, coming up to 32 as a financial advisor. So I'm going to share with you lots of things that I look at, that I do, and that's it. So we're just going to do the thank God it's Thursday stuff, because Thursday, it just rolls around really fast. It really does. The weeks fly by. I mean, I can't believe that. When we come back next week, we will be past the midpoint of August, and just summer is it's going away too quickly. But I don't want to depress you about that. I'm actually having a really nice summer, and I think, and I hope you are as well. So let's do a quick share screen. We'll go through the market updates. Okay, pop myself up in the corner here. So you see the Dow is up 15. It was down a good chunk of the day. It's been hitting record after record. Today, another new record. Um, Not a bad day, just a ho hum day. I don't mind a ho hum day, by the way. This is just like perfect. I love a good ho hum day. Gives you a chance to breathe, to think about other things. Believe it or not, I don't look at this stuff all day long. I mean, I've had times when I'm out of the office with meeting with clients and whatnot, talking about goals and plans and next steps to take for financials, et cetera. All these important things. And the Dow could be down 1,000 points, but when I'm with you, I am focused on you. Okay, Nasdaq was up 51 points. S&P was up 0.3%, okay, up 13 points. Gold recovered a drop. Gold's been weak, and I think part of the problem is that not only is gold losing its luster as an inflation hedge, losing its luster. Yeah, I've been dying to do that all day. Losing its luster as an inflation hedge. Uh, Nobody really wants it. Is crypto the new gold, the new inflation hedge? We'll see. The jury's still out. I know a lot of people think the decision's already been made, but it's way too early in the game of crypto to decide for sure if it's going to replace gold. Now, if you want to place your bets in crypto, go right ahead. That's a personal finance decision. That's what we do here. I put the personal into personal finance because everybody's different and everybody looks at things through their own eyes, through their own filters. U.S. 10-year Treasury continues to edge a little higher, 1.36. Yesterday we were talking 1.35. The VIX, it's 1559. It just is stubbornly under 20. I think that's a good thing. It's a level of calmness. Some people say maybe we're getting into a little level of complacency because every day it seems the major averages drift a little higher. People are ignoring bad news. I don't think investors are ignoring bad news. I think that you know bad news and the stock market are not necessarily the same thing. The economy is not necessarily the same thing as you know the stock market. I hope I'm coming through okay. This is like what's going on here? Can you guys hear me okay? I hope you can. I feel like my mic just cut out. So let me just make sure I am good on the mic. All right. Just give me 1 second. Audio. Yeah, it looks like it's coming through. For some reason it's not coming through on my phone on my setup, but that's okay. Um, if you have any issues, if you're not hearing me or you are hearing me, let me know in the comments. Let me know where you're from out there. Um, John Martucci, yes, you can hear me. Thank you very much. Mother, I appreciate the feedback. It helps me a lot. Thank you very much, John. All right, so let's move on a little bit. The Russell 2000 that was off a drop today. No great shakes. I don't think you could really read much into anything today. But while I have you here, I want to show you this. Let's go to news. I'm used to using Google News, but let's see. The we'll skip that. I don't need to show you that. The news on the COVID front. Thank you, buddy. The news on the COVID front has been consistently bad. Hospitals are reported as full or close to full. ICU beds have run out or are very close to running out in southeastern states, in Florida, in Texas, in Louisiana, in Arkansas. Mississippi, I think this morning requested one of the two main hospital ships. It's pretty bad out there. I think a lot of people are looking at it in two ways. The Delta variant, it's localized or it's stuck in one geography, the southeast. But and this is the fly in the ointment, when as school districts start to open across the country, like I know where I live, school districts typically don't open until after Labor Day. So, we're a little bit later than the rest of the country. I'm on Long Island. We'll see if opening the schools creates this whole thing, with more COVID spread. I have a feeling my school district is going to come in with a mask mandate. I saw the superintendent of my school district yesterday. Great guy, by the way, and he says it's looking like that mask mandates, but they're going to try to hold off on announcing that as soon as possible because they are going to get a lot of pushback from some people. I support the mask mandate, but that's me. In any event, there's we have to move on. So let's talk more about the economy and some charts. We're going to take a quick look at the watch list that I look at every day, and I'm going to pull that up right now. Share the screen. Pop myself up in the corner. Another good day for the industrials, by the way. United Rentals, Waste Management, UPS, GEG is going to be one of the charts that I want to show you. But let's just move on. Sector ETF. So, winner of the day, healthcare, technology, which reversed from yesterday, real estate, communications, financials, utilities. What was down? Consumer staples, energy, building materials, and industrials. Building materials and industrials just had one hell of a rally. So I'm not surprised that they did back off a little bit, but they got a big boost the last 2 days from the infrastructure bill making its way successfully through the Senate. So I'm not surprised that those are up. Financials, up XLF. These are the sector ETFs. Okay, these ETFs represent the 11 major sectors of the U.S. economy, of the stocks from those particular sectors, like industrial stocks, financial stocks. Okay, so let's take a look at some charts. You ready to look at some charts? Because I'm ready to look at some charts. So we're going to make this short and sweet. I want you to ask me questions. Well, it's not really what I want. It's what you want. It's your show. I'm just here to facilitate your show. And by the way, one of the things that I want to say is, when people ask me, and my answer to this question is, it's important for me to share this with you. When people ask me, what is unique about your firm, Mitch? Client first strategy. What's unique about client first strategy? The unique thing is that the firm is not really my firm. The firm is my client's firm. The whole firm operates around the clients in the best interest of its clients. Everything that I do is for the client. So I don't manufacture investment products. I don't need to manufacture investment products. There are tons of options out there to choose from to build any client, an individualized, personalized portfolio based on her or his financial goals, time horizon, and risk tolerance. But we put it together with a plan. See, we don't just go with investments first and then say, let's see what we have. We make a plan. Investments are part of it. Insurance is part of it. But the cool thing is that I could find something new, do something new, or a client could suggest something new that I really like, that I think makes sense for my other clients. And then I could immediately incorporate that into the business. And now it's just a permanent part of the business. And the decision is just like that because it's good for the clients. No committees, stockholders to please, upper management to pay. It's my client's firm. And I can be so reactive, so proactive for clients that I could take a suggestion that's good for the clients, bring it to them. And I have the kind of clientele where I could talk to them about these ideas and get their feedback. I don't want to just come up with a new idea that I think is great for my clients and not ask my clients first. Sometimes you could, how it is in business, you could think you have a great idea and you bring it and you start implementing it into your business practices, right? But did you ask your clients if it actually works for them? Just because you think something is great for the client doesn't mean the client thinks so. Now, of course, if you're not communicating your ideas well, then maybe, the client did not fully grasp what you're trying to put forward, but that's not the client's fault. That's your fault for not communicating well. So you've got to communicate your ideas with your clients, make sure it's a fit for them, the way you manage your business for them. And then just like that, it's part of the business and we're in. And that I love the ability to do that. Doing the best job you can for your clients, doing the right thing for your clients should not require an endless amount of approvals from higher ups and time, because what happens is it'll never get done. It's too hard to make a change. It takes too long. And that's why you have some firms that are still operating like it's 1995. I'm the firm of the future. Okay. So there's my 2 cents. Let's look at some charts. First two charts I want to show you are Ford and GE. I'm going to show you GE first. Okay. Let's pull up GE. I'm going to pull up a quote, and then we're going to do the share screen. Boom. Here we are. Okay. GE went out at $106 today. They might be thinking, wait a minute, GE went up to 106. No, no, no. GE did a 8-for-1 reverse split a few weeks back. So on a split adjusted basis, it's still about a $13.50 stock. Okay. But they did a reverse split. I guess they think it makes them look better on the exchanges. It's like, you're a more important, prestigious company when your stock is over 100. Maybe that's what they thought. I do think that's what they thought, by the way. They got kicked out of the Dow because the stock was so low. The Dow Jones, S&P Dow Jones, they don't want the Dow Jones Industrial Average, the people who make that index, who maintain the index, they don't want 14, 15, or $13 stocks in the index. They want $100 plus stocks in the index. I think the lowest price stock right now in the Dow at $49 a share is Walgreens. Okay, having said that, let's take a look at the 5-year chart. Okay, should you buy GE? Now, I've always said I don't like to buy stocks that are making new year lows. Some people think, oh, the stock's at the year low. That's the bottom. I can't stand that when somebody says, "Oh, I want to buy stocks at a low. Is it at the year low? Ooh, that's good." I think when you're buying stocks at the year low, I think you're buying damaged goods. I would rather take a wait and see approach. There are plenty of other great companies that are doing so well that you could invest in. Why do you need to risk your hard-earned dollars on a stock that's trading at a low? But this stock hit a low at 2019. You see that over here in the year 2019. And then it bounced around similar lows from mid-2020. And it started to come up late 2020. And finally surpassing this little high watermark over here. All right, see a little high watermark over there? Okay, let me just get that. We'll take a look at Disney in a minute. They just came out with earnings. And now it's past its former high, bit of a breakout. And to me, that indicates that anybody who could have, should have, would have sold GE has already done so. And that's why I think the chart, GE or not, tells me that is a solid place to be. All right. You make up your own mind. I'm not a chartist. I'm not a chief market technician, but I do look at charts. I've been looking at them for a very long time, and I do think they have their use. There are some people who make all of their decisions based on charts. I don't make all my decisions based on charts, but I do think they could help you with a good. I do think charts could help you with a good entry point, in particular when you're looking at value stocks. So let's take a look at the 5-year chart of Ford. Okay, Ford is a pretty similar story. It's came down early 2020, down below 5. I don't like to buy stocks that are breaking new lows. I know what you're thinking. Well, if you bought it at the low, you would have made so much money by now. I realize that, but there's something called risk. And it really looked like things were pretty grim for the future of Ford. So they finally broke above these levels. You see this peak, finally broke above, and it looks like anybody could have, would have, should have sold it. And that's why I'm looking at this chart. I just want to show this to you as an example. Now let's take a look at some of the meme stocks, okay? Let's take a look at AMC. This is charts. And this, let's go to, we'll do a shorter chart, okay? We'll do a year-to-date chart. This kind of chart this is AMC, but it's emblematic of the meme stocks. Okay. Look at this chart. It went parabolic, started to back off. Everybody's fighting. No, no, no. It's worth more. It's worth more. It's worth more. They tried to make another stand. It couldn't. And then it backed off. And this whole thing over here is where the Johnny come lately. See where the T is over there, or the crisscross? The uh, the hairs right here, the crosshairs. That's the Johnny come lately trade. All those people are scratching their heads now. What should we do with it? Okay, wait. So let's take a look at Clover, recent SPAC, SPACity SPAC. I spell SPAC SHIT. There, you see, I didn't say the word. Okay, Rita, I did not say the word. All right, I just spelled it instead this time. Okay, but if you look at Clover Health, let's look at the year to date. Very, very similar chart. Okay.
One moment.
Why did that happen? Parabolic, came down, tried to make another stand, couldn't do it, came back down. But look at this, up to 22 and a half, down to 8. This whole thing here, all those Johnny come lately trades. These parabolic charts have a way of pulling people in and just crushing them. And this is, I've seen this happen so many times in the past. Okay. So that is that. And then people flush their money down the toilet. Okay. And I'm going to take a look at one more. And this one is going to be controversial because you're going to be like, how could you even compare that with Moderna? How could you compare Moderna to, meme stocks? Moderna is saving lives with their mRNA vaccine. But if you take a look at Moderna, let's go back to the 1 year. Let's go to year to date. This is gone, not quite as parabolic in a straight line, but it's gone parabolic. And the high on it is almost $500 a share. And now it's $392. So it's down, about 20% already from its peak. And that peak was August 9th. Today's August 12th. I mean, 3 days, that's a pretty big drop. Now, no one has anything to complain about. The stock has been just an absolute beast, an absolute home run. But when you see it take, like the other meme stocks that went over, when you have these parabolic runs and they get hot, you're not, in my opinion, you're not going to pick the peak. In my opinion, the peak is not something that you're going to trade accurately. Nothing wrong with taking a little profit along the way up and maybe holding on to some of the stock for a very long term to really wring out any potential growth that you think is on the way in the next couple of years. And that's why I look at charts. When you see a stock like that go parabolic, there's some profit taking. I'm sure the stock will have a rebound, and then we'll have to see if it could exceed its past high. If it can't, then I would say it'll probably keep backing off and find a new lower level, probably around here, this crosshair right here, about $328. And if it goes below 328, then it's probably going to come down here. See this peak, this where the crosshairs are? And that is about 236. Can happen. So this is why, no, you're not even seeing that. I'm going to put myself back up here. So this is why I look at parabolic charts. You see this here? Stock was up to $497, okay, a couple days ago. And now it's already down to 392, down over 20%. And the next, if it doesn't start to bounce back up and break through new highs, then what I'm saying is this little upside down, this little V over here, like around 328 or so. And then the next one is this one. This is like a serious bottom, and then this one, and then this one. And this looks like a pretty solid bottom over here, and that's 118. It could do that. And that's why I look at the charts, because I think they're helpful in determining whether or not one might want to buy or sell or just hold on, hodl. So that is my story for the day. I'm sticking with it. And Eric is out there. Hey, thank you very much, Eric. Good information as always from my fellow financial advisor. Thank you very much, Eric. I really do appreciate you watching, taking the time. By the way, uh, some of your videos like, have been hysterical. I love the work that you're doing. Like we're all financial advisors. I'm part of a group of financial advisors in LinkedIn, and like we've all gotten so into content creation, and we cheer each other on, and we encourage each other to make more. And it's like for me, for sure, I find it so reinvigorating for the business. I just love it. It makes everything so much more fun. And the more I teach, the more I educate, the more I enjoy my career. And I really feel like I found my calling. All right, guys, thank you very much. I know it's Thursday, but it's the last show of the week. Have a wonderful weekend, and I'll see you next Monday. Thank you.